Turtle Soup or Liquidity Sweep. A lot of people try to be profitable using it but failed. It's not about the turtle soup, but the way you approach it. I'll show you in this video how to trade and master turtle soup the right way. We're gonna cover everything from types of turtle soup. A hint, this single topic by itself will make you significantly better trading turtle soup, the relationship between market makers models and turtle soup, the perfect liquidity level to look for a turtle soup, and finishing the video with example. If you appreciate my free content, then make sure to hit the like button, subscribe to the channel. This is Mulham and let's get into it. Now, before going deep into the details of this video, there are some prerequisite or some topics that you need to understand before going deep into the video. You have market makers model, full course, 2 parts. You gotta understand the market makers models, at least a basic understanding of it in order to, understand what I'm gonna cover in this video. You can also watch my liquidity sweep or turtle soup video, very detailed full course explaining everything about turtle soup and liquidity sweep. And also, this is an additional video that you gotta check, which is the ultimate trading plan. So this is a full course. You see almost 50 minutes of gems and details. So make sure to go over those videos. Unless you have the required understanding for this video, then you can skip all those videos. But if you don't have understanding, you're gonna be struggling in this video. Now, one of the most important lessons that I was teaching my students, that some of the people that I was teaching, they were not even break-even traders. They were way below that. And one simple sentence, one simple tip and advice that took them from that level to another level. So they were break-even traders and immediately started to be a profitable traders. What is the tip? What is the advice? Very simple. It's all based on the types of turtle soup, because what a lot of people are trying to do is rely on one type of turtle soups while really leaving the other one that could be, more significant, easier to spot, higher win rate, but still people tend to go to one type that looks fancy, that looks, very impressive to catch, but it's really hard. And you're gonna fall into that losing streak just because you're sticking to that specific type of turtle soup. Now, when it comes to turtle soups, and those are some things that not everyone is gonna tell you about turtle soup, right? And people sell courses just for such information, the things that I'm gonna cover today. So turtle soup could be a reversal turtle soup or a continuation turtle soup. So it depends on the trend, right? If we are in a downtrend, you're basically, and you're looking at those highs, this is a continuation. A reversal, it has a higher reward to risk. It looks fancy when you catch it, but then it has a lower win rate on the other hand. So you're going to be falling into that losing streak. You're going to lose 1, twice, 3 times, 4 times until you get that trade that you're going to go to Twitter, upload it, post it to friends and be proud of it. But on the other hand, what is happening behind the scenes is that you lose 3 or 4 or 5 trades before catching this one. It's a very risky entry. On the other hand, when it comes to the continuation, we have lower reward to risk, and it's not always about the reward to risk. I've learned a big lesson about reward to risk when I was starting with ICT and smart money concepts. All I was looking for is the high reward to risk, thinking that this is the holy grail. Now I can catch, trades all the time with a high reward to risk. But then after some years, realized that to have a consistent win rate, you got to deal with an ideal reward to risk. Because it's not going to be, 20 RR, 10 RR, much less, and something that is average, that when you take those trades, you're going to be winning or at least break even in a good number of trades instead of losing 10 times to catch, for example, a 20 RR trade. So that's one of the mistakes. It has a higher win rate when dealing with continuation, and it's actually a confirmation entry. So understanding those two types, and we're going to go over examples about those, it's really going to open a new way of understanding about the turtle soup just by understanding this. We're going to start first with the reversal turtle soup, and this is what I don't want you to execute. This is the tab that I want you to avoid. Now, there are people who have the enough experience and that's their model. So they're good at this. They can actually execute this. They know the risk of this model. They know that they can lose 2 trades, 3 trades, 4 trades before getting their winning trade. Psychologically, they're ready for this. They're ready to lose few trades before getting their winner. Okay. So let's assume that we have this POI here in red. This is either fair value gap, order block, or liquidity level. As you see here, that's a liquidity level. What happened is price going up. And what do you see here? This is a market maker's model. Left side of the curve, right side of the curve, right? Now, what other people would do, and this is catching the reversal turtle soup. You see, as price is going into that level of liquidity inside of the POI, the higher time frame one, we took that level. But let's say you're not looking at this. What happened here is as soon as price goes into that POI, the first time we had a reaction, most likely what? Actually, a CISD or change of state delivery on the lower time frame executed on this, getting stopped out here, right? We started going up, another CISD here, getting stopped out. And then maybe you say, you know, I'm done with this. It looks like it's going to go up forever. And then the last time it started going lower and now you're not in the trade. So you lost 2 trades and you actually missed the main one for whatever reason, right? Either it's your psychology or your risk limit, or it's not your time window for trading. For whatever reason, you did not take this one. The reversal turtle soup is trying to catch this high, which is really hard to be caught, right? So catching this high in this case is very hard. That's what a reversal turtle soup is. That's where you actually fail a lot of the time. So you fail once, twice, and then you give up here. One price started going lower. And then just because you're trying to take or catch this high, you forget about everything here. So that's the mistake. Now we're going to go to the continuation and see how we can look at this from another way of understanding and how we can actually be winners instead of losers. Now, before going into the continuation, right, we got to understand the relationship between market maker's model and turtle soup. In a higher time frame, what is a market maker's model? In like, I would say in a minute, I'll go over this very quickly. Market maker's model is nothing but price coming from external to internal or internal to external. And we have 2 curves, up and down, or down and up, right? So we have this move from this fair value gap, which is the internal, going up to this external. This is how you see it on the higher time frame. On the lower time frame, you can see that we have different stages: sell side of the curve, buy side of the curve. And what we see here is a smart money reversal. This is how we can actually catch that reversal turtle soup, right? It's catching the smart money reversal inside of that higher time frame POI. And that's what we are not trying to do here. So by understanding this, this is where we actually need to have the confirmation. We need to deal with market maker's model when trading turtle soup, because that's where the highest probability trades in turtle soup are gonna be. Now the continuation turtle soup, and that's where everything becomes clear. So the same POI that we're having, now we're taking a look at this on another point of view. We have the liquidity level, we have the POI, again, fair value gap, order block, whatever, breaker block, any PD array that is valid. Now you see, price goes up here. We're not looking for this. We're not trying to catch the high. So whatever happens here, I don't really care, because what was happening here in the left side of the curve, we were actually uptrend. We were in an uptrend and we're going up. So we have no business with taking those highs and looking for a turtle soup at the highs, because we're already in an uptrend. In an uptrend, what we have is breaker structures to the upside, not turtle soups at the highs. That's the difference. We look for turtle soup below the lows, but not above the highs. No, we have breaker structures here. Now what happened here inside of this POI, we took this high and then we had a market structure shift. That's what I want to see. I don't want to try to catch this high. I want to see structure being created and then I can go and execute my trade. So market structure shift, how to confirm that this is the high, not only a market structure shift, but we want to make sure that we are in an extreme POI and an SMT here. What is an SMT? Check out my last video. I've talked about, the SMT divergence, everything about it, a lot of secrets and a lot of gems about this that no one is going to tell you about. So we have the SMT here. We started going lower, the market structure shift, and we started going lower. So now you see, we had this buy side of the curve or the left side of the curve. All what we are trying to do is actually participate on the right side of the curve or in the sell side of the curve, right? So this side here. Now take a look. After this confirmation of the market structure shift and the SMT, most likely we're going lower. What I'm gonna look for is what is called a continuation turtle soup or a continuation purge. So simply, I want to see high being created. Either we break the low or not. That doesn't really matter. I want to see that high being taken again, and that's your turtle soup here. How do I know which one is valid? I want to look for fair value gaps or any POIs above them. So I want to see this as an inducement. What is inducement? Again, I have a lot of videos about it, but in simple terms, inducement is when we have a high that is not in a POI, which gets swept after. While price is sweeping, it goes into that POI. That's an inducement because a lot of people were induced to enter here while price is not into that, real fair value gap. But then what happened is we swept that high into that fair value gap and we started going lower. So this is your continuation purge. This is your continuation turtle soup. This is what I'm explaining in this video. This is what I want you to execute. We started going lower. You see, we're still inside of this, still side of the curve until we reach this original consolidation. Now, the best two continuation turtle soups to execute, we have two types. The first one is the immediate one after the market section shift and the SMT, or in other words, the first one after the smart money reversal. So you see, smart money reversal here, happen here. We want to look for the first high being taken or the first liquidity grab or the first continuation purge right here. The first one is the highest probability one. We started going lower. Anything in here could be a miss because it could be price, not taking this high, but going and taking that high again and started going lower. So anything in here is a miss until we get what? Very close to that original consolidation where we have what? The low resistant liquidity conditions where we can actually just go below and shoots into that original consolidation. So when we get very close to that and we started going up, we look for the extreme POI, in this case this one, and we look for a high continuation purge targeting the original consolidation. So the best two continuation turtle soups in order for us to only deal with the high probability ones. We're going to look for the first one after the smart money reversal. The second one is the very last one. This is actually what? This is a fake market section shift and then price going into that main drawn liquidity. I've talked about this before. Now, make sure to take notes on this. Make sure to not only execute, but make this as your highest probability one. So the first one and then the last one. That's how we trade continuation turtle soups. And be sure that after me going over some examples, you're going to have the real understanding of this and you're going to be a master of this, especially if you practice it enough. Now we're going to go and cover some examples. I'm going to go in different time frames and show you how you can deal with this. If you need more help with time frames, alignments, and turtle soup entries, then make sure to watch the videos that I suggested first. Now, starting with the first example, it's going to be a 4-hour PD array, a POI, and then M15 market maker sell model. What we have is this 4-hour FVG. Price is taking this liquidity level as well as this one. Actually, in this time, we got the valid market section shift. And you're going to see this on the 15 minutes. We had this original consolidation right here with this low as external liquidity. It doesn't need to go all the way there. It might just go from where? From here, we got some profits. We might hold there, go break even, but I might go up again, deeper into the fair value gap, start going lower. So we don't know exactly if it's the perfect time for price to take that external low, or it could go higher, or it could just disrespect this whole fair value gap. Markets are unpredictable. But we have this idea. We're sticking to this framework of internal to external, and we want to see price going lower from here. Now, when looking at the 15 minutes, what do we see? Is that as we took that high into the POI, we started going up. We respected this FVG here. That's the first sign that, okay, it looks like we're starting to go lower. We also created this IFVG, inverse fair value gap, and then we had that market section shift. Now we started going lower. What happened here? In the New York session, so the smart money reversal happened on London. We started going lower. We created this order block right here. So always look in market makers model. You should always look for the opposite candles. So in this case, the up close candles acts as resistance in this case. Same thing happening here. And it's always going to be the case. Now, what happened here? We had this order block. Price started going lower. We had this FVG, but it was fully filled. What happened after is creating a high, not able to break structure. We took that high and failed to close above it. So there was a wick and immediately closed below. That's an entry. That's a turtle soup here. So that's a continuation because we already confirmed that this is the right side of the curve. We already confirmed the market section shift. We already confirmed the smart money reversal here. And we have a lot of confluences telling us that we are starting to go lower in this case. first Turtle Soup, continuation one, started to go lower. We started to go up, went lower, was not able to displace below, started going up, and we failed to displace above this high again. Could have taken an entry here, and you see this trade here, it's a 3R, 3R, and a 3R. So all those trades are 3R trades. We're not looking to enter here and target the, the original consolidation. It's not going to be happening all the time. You see, that's a trade here, started to go lower. We fill this fair value gap, started going lower. So you see, this is out of kill zone. This is the agent kill zone. And what happened here is we started going lower. We broke structure, but then we had that fake market structure shift or turtle soup here, taking the high, not closing above it. We close here, could have entered here, stop loss above that high, and then that's a 3R. A lot of times, especially also here, you see, so we took that high, we started going lower. That's another opportunity to look at. So you see different ways of trades, but the best one is the continuation turtle soup, and that's how you can perform it. So how to have those high probability turtle soup entries? Just be on the right side of the market makers model. Either it's a buy market makers model or sell market makers model. Either way, you'll always be on the right side. And now the second example goes with a weekly fair value gap with a weekly also liquidity level and liquidity sweep. And then we have a 4-hour market makers model. So we're going to go to the 4-hour after the market structure shift and the smart money reversal, and we can go from there. So what you can see here in the weekly, we came to this on this price action leg from this high to this low. We started this curve going up, respecting this PD array, and then taking this liquidity as well as this one inside of this weekly fair value gap all the way to the premium side of the curve. And we have this also inverse fair value gap, a fair value gap inside of it. Now we see we had the rejection. We can go to the 4-hour and see what happened there. Now we're looking at the weekly, and just a disclaimer here, it's not going to be that easy to always look for those highs to be taken, because sometimes we can have a high that is not that significant and we have another high above it. That's where price is going to go to. So make sure to watch my other videos, especially my video about the high probability liquidity sweeps. We see what happened here is we started going up. This is the weekly fair value gap. We pushed lower with, very aggressive way. Market section shift here, a minor one, and then a major one here. We closed below. We had this high inside of a fair value gap. What happened is sweeping that started to go lower. So that's a 3R trade. You see, we had that 3R trade. We started going lower. We swept this high again into the fair value gap. But you see, the rejection here is too big. And you see where the rejection happened here, we close here in order to enter somewhere in here. Unless you, went with a lower time frame entry, it's going to be, somewhere in here. But then if you follow my Turtle Soup entry, it's going to be somewhere in here and your take profit is here. So it's not even 3 to 1 in this case, because you're going to have a stop loss all the way up here. So skipping this, we can see that we swept this high again, taking this low. You could have gotten this low for take profit, or at least break even, and then go for 3R. That's another trade. You see what happened after is we're going lower with a displacement closing below this low. We had this high with this high also, sweeping that 3R trade, going up. We also swept this, not a 3R trade. This is only 1 to 1. So we did not go 3R and then we swept this level. That's another 3R trade you could have taken here, but I went with this one. You see this one here? That's a sweep, price closing below, entry right here, 3R very easily. And then another one, and that's the continuation pair. So you see, we were able to identify the smart money reversal, looking for the market section shift here and here, and then we're trading on the right side of the curve. We are looking for the continuation turtle soup other than the reversal, trying to catch this high. Maybe here, maybe, in the lower time frame somewhere in here, but we're looking for the continuation instead. And you see, that's another high, another profit. Now, just to show you that this actually works in all different time frames, PD array with the overlapping right order block here, high inside of the fair value gap. We're already going lower. We went all the way to the order block, so we're still respecting that fair value gap, but we actually closed, way below the 50% of the fair value gap. But as long as we did not close below, and we see that price is actually approaching that order block on the low time frame, yeah, we could have taken that one. So we have this external here that price could go to. We have a move of internal to external on the 15 minutes, which leads to 1 minute market makers model. Taking a look at the 1 minute, we had this 50-minute fair value gap here. We started going lower, but then pushed up, and we created this low, this high, and then this low, and we broke above the high. That's a market section shift. an internal one, but one that we could, deal with because we created a fair value gap here. So we created a fair value gap. We started going up. Now take a look at this fair value gap. What happened is we did not fill that fair value gap. We created this low as an inducement. A lot of people thought that, oh, this is actually price going into the fair value gap or very close to the fair value gap and closing bullish. So they're going to put their stop losses. Some of the people here, some of them way below this point. So what we're looking for as a continuation purge is for price to take this low into that AVG. That's a high probability turtle soup. When price close above, you could have entered here and take profit at the high. That's a 3R trade. You see, very easy to understand. And we're not trying to catch this low. So we're not trying to catch this low, not even this low. We're looking for the continuation after the market such a shift and after the confirmation, in other words. So stick with this. Always look for the context or the framework. So we are having this internal move to go external. We look for the continuation purge here. We don't need to always target the external, especially if you're dealing with weekly, PD arrays, and then 4-hour market makers model is going to take whatever sometimes for price to reach that original consolidation, and it's gonna give you like 10 RR, 15, and it's not really worth it every time because price is not gonna go there every time. Go with 3R or 4R or 2R, whatever fits your trading plan, and you can start from there. And as long as you make money, then you can increase your reward to risk if it's worth it. That's it for the video. Hopefully you guys learned something new today. I tried my best to put this in the easiest way and to actually give you something that a lot of people won't give you even with money in exchange. If you guys appreciate this content, then make sure to like, subscribe, and share this video with your friends. I do believe that is going to help some people when you share it. This is Mulham, and I'll see you next video.